May profits be upon you. Welcome to another weekly Forex Forecast. We're looking at the US dollar index. All right, and we're going to do some analysis on the US dollar. Now, the economic calendar has one day I want you to pay attention to. Now, Monday, bank holiday, Wednesday, nothing. No red folders on Monday or Wednesday. Those are days that, playing the markets can be kind of tricky because the setups that you would normally take, that you would normally see play out, sometimes don't work out. And that's because there's no volume. There's no traders trading in large amounts. So those setups that you get, they may look good at the beginning and then they don't work out. Sometimes the market moves, sometimes it don't. Just those are days you want to sit back and be extra careful. I'm telling you right now. All right. But come Friday, we have core PCE. This is the preferred measure of inflation for the Fed in the U.S. And if the numbers come in higher than expected, looking at that 0.3% over here, if it comes in higher than expected, then the U.S. dollar gains in value will go up, and the opposite will hold true. The U.S. dollar will go down if the numbers come in under the expectation. All right. Just bear in mind that we just had the Fed Chair Jerome Powell talk real dovish about cuts, and the market is already pricing in that there's going to be a better than 75% chance that the Fed is going to cut rates, and they're already baking those numbers in. All right, so those are things to be aware of fundamentally, right? But what I'm looking at technically, we have a bullish market. We've been bullish since when 2011. All right, the market's just been going higher and higher, and we are hitting the trend line going up almost perfectly. All right, but are we about to turn up here from current levels? No. Doesn't not necessarily. Yeah, we've been bearish since January, right? And the only bullish month we had, was this one here, July. That July candle, and it engulfed the low and the high of the previous June candle. This is a very bullish indication. All right, so that's why a lot of people, some people, including me, haven't given up on the idea that price could go up from current levels. There's a chance. One of the reasons why there is a chance, I will show you real quickly. One of the reasons why I think there might be a chance, and make no mistake about it, I am not bullish in this. I'm not looking for bullishness next week. All right. But you see how we're hitting those lows or whatever, the trend line. But what I want you to see is this is the low of this is the swing low, and this is the low of that swing low, right? And you'll notice that from this low, price pushed higher, just like it did here. From this low, right? The swing low, the low point of the swing low, you see price push higher. And then we had a very bearish couple of months after that. We have a very bearish month starting as of August, very bearish, coming back correcting that move from the previous month. This one correcting the moves of the previous months, right? But it did not take that low. That's what I'm trying to point out here. All right, it did not take that low. This was a protected low, and the price came close, and then we started to see movement up after another nice engulfing kind of candle, and we're seeing price move higher. Now, here, what I want to point out is we have, not here, I didn't mean to put that there, from the low and high of the meat of this candle, the body of the candle. I did not want to see a close past the constant encroachment, the midpoint, the equilibrium, if you will, and we are already heading towards the 786 Fibonacci retracement. All right, we got the 618 golden ratio here and the 50%. We're well past that 50%, but we have not gone past the 786. Once you see price closing past that 786, there's a good chance we're heading towards these lows. All right, right now we're not there. We're still in correction territory of this move. All right, so that's something to look out for. All right, a quick turnaround, but the problem is we've been bearish for months. All right, we had only one bullish month in this since January, and August is already very bearish. There's no reason. Let me be clear. There's no reason to start looking for bullish setups. There is a good reason to look out for bullish setups. Got it? All right, but there's no reason to start longing the US dollar, and there's a good chance this bearish momentum is going to continue. That's it. All right. I hope you can get in between what I'm saying there and catch, pick up what I'm putting down. All right. Now, if we go to the weekly, I wanted to show you this. All right. You see how these candles closed? I want you to see this very clearly. You see how these candles closed? Look at this. All right, we had this bullish candle, and that was a news-filled candle. I can't remember what the news was, but everybody, you know what it was during July, the week of July 28th. All right, there was a whole bunch of news going on at the time. But in either cases, it did close higher than the previous candle. All right, so you would expect price would head towards that high, or the next high, the current candle's high. But here's the deal. After you see a long wick like that over top the body of the candle, and the wick is longer, then you want to see price respect the midpoint, the 50% of this candle, of the candle's wick, of the candle's wick. All right, not the smaller body, but the wick. And you want to see price not close past that 50%. All right, now here's the 50% up here. I did this in the wrong, again, I did this in the wrong way. All right, I did it again. Doggone it. All right, down to the 50. All right, and you see that we did not go past that 50%. We did not didn't get close past that 50%. It respected that 50%. So we got this next candle. All right, the next week's candle of the week of the 4th of August. And you see how it reached up, did not go past the 50% of this candle, and closed well short of heading towards that low. But because it closed bearish, and because it did not come close to that low, and because you see it wicked on top, did not and respected the 50% of this candle, you expect that very next candle to be a bearish candle, to trade towards that low. All right, and that's exactly what happens. Price did come up, take out the high. Didn't expect that. All right, didn't expect that, but it happened. But price did come back and did what we expected it to do. It did trade towards that low, and it closed below that low. So the next candle, this is next candle theory. The next candle, we're expecting price to head to trade towards that low. All right, and again, we have this long body. We don't want to see a close past that 50%. Well, the next candle goes back up to that 50% area, respects it, and comes back down, trades towards that low, takes the low, swings past that low, and then pulls back up within the range of the entire candle. That means it didn't have enough strength to close past that, not enough conviction to go past that low. Do I expect price to trade towards this low upon the open of the next candle? No, I do not. Doesn't mean it won't happen. All right, but more often times than not, when price closed back within the range of the previous candle, there's a good chance we're probably going to be trading towards that high. So I'm looking for the candle to open and maybe come up short, trading towards this low, and start to trade towards the middle, the 50%, the equilibrium of this candle's wick. I'm looking for price to head up towards that way. If we close in a manner up around this area, I'm going to expect some more follow through towards that high. We'll see how the next candle opens and closes, but that's the way next candle theory works. Okay, that's how you get your bias and all. But if we go down to the daily, what I want you to see. All right, but just to conclude, so that I can summarize, just so that you understand, there's no reason to look for shorts. I mean, there's no reason to look for longs. All right, no reason to look for longs, except be aware that there's a chance that it could happen because of what I just gave you. That price didn't close past that low, and next candle theory says that we're probably going to head towards those highs. If you want to take some scalps or whatever on the lower time frames, have at it. But this is a bearish market right now. All right, and right now also we are also going into consolidation, which is obvious. All right, it's not a pleasant place to be trading in. All right, now you see how we made that swing low, the protected low. We made a higher high, higher low, higher high, breaking structure to the upside. So, you can see that if we're talking about what are we technically, bullish or bearish? All right. Yes, the higher time frame is bearish, but on the daily time frame, the swing. This is the swing low. This is the swing high. This is the break of market structure. It's bullish. That's it. That's it. Until we break this low, we're not bearish. We're not bearish. You can say all you want, all right? And the high time frames dictate, tell us, hey, we're bullish or bearish. But on the daily, according to the daily time frame, we're actually bullish. All right, that's and there's hardly any getting around that. Yeah, this bullish fair value gap, I no longer even look at because it's been used already. All right, it's been tapped into. We came up, and you can see how this news candle totally engulfed 1, 2, 3, 4, 5, 6, 5 or 6 candles. All right, we did close, but we did not take the low as far as closing past that low. We did raid that low. Yes, we did raid that low, but just keep something in mind here. Keep something in mind. This is the low of what? A consolidation. All right. We didn't close past that low to signal that, hey, we're going lower. It pulled back up just before it closed past that low. So now I'm looking for correction up until towards between 38% and 50% of the Fibonacci retracement, and then probably going to see some continuation after that. You want to take longs in that? You can if you want to. I wouldn't recommend it. I just wouldn't recommend longs unless you're going to scalp it up, and you can do whatever you want. Okay, but I think this news candles tend to be kind of like the market's emotional candle. All right, knee-jerk reactions. All right, and a lot of times you'll see that they don't form like this is a nice bearish engulfer, right? A lovely bearish engulfer. It looks like an order block and a strong order block and all. But when it's a news candle, price tends to not respect them when it gets up there. You would think this would be a protected high up here. And if it wasn't a news candle, I would say yeah, it would be. But you'll see when price starts to come back up here, and it will at some point. You'll see that we were probably going to pass through this with a little reaction, if any. But that doesn't mean to start taking longs from here. No, it doesn't. What I want to see is what price does when it gets here. All right. I want to see what price does once it gets there, because that is a demand zone, a legitimate demand zone. You see how price left this level in such a strong manner and an impulsive manner. This is all still correction to this impulsive move. That's why I'm saying yeah, we're bearish, but look out, keep an eye open for price to turn around. That's all I'm saying. Okay. If we get down to the 4 hour, I'm going into overtime with this analysis. I want you to see that we did sweep liquidity here, and this is not a weak, a strong, like big bearish fair value gap that price could come up into, and then we're going to just force our way down. No. It's after a huge candle like this, price tends to go into consolidation for a good minute down here, and making its way up as far as correcting before it starts its next move. So that's what I'm expecting. It might not happen. We might start to fall immediately. It might not happen. But this isn't something that I want to trade in. Okay. I want to see a break of market structure that allows me to say, okay, it's safe to go to look for longs. That's not going to happen until for longs, as far as that level is concerned. For me, that I need to see that break. All right. And as far as shorts are concerned, I want to see price pull back and respect this level right here. All right. Why do I pick this level? Because it made a new high here. It broke that high, and price tends to respect those areas like that. If it showed a strong support area there, it's probably going to turn it into supply. Resistance. Okay, so I'm bearish, but I'm looking out for I'm being very mindful that we're still in correction territory. All right, we're still in corrective territory. Higher high, higher low, higher high. We haven't broken this low yet. All right, so for me, this could come down a little bit more and then start to turn around and take out that news candle high, and then we'll have a natural area of demand and turn around. I already showed you the bigger picture on the weekly that we are in a big uptrend on the higher time frames, the monthly and the weekly. All right. Yes, for months we've been bearish, broke these lows here. Is this low going to stay protected? That's the question. And we're still kind of in a consolidation, and we're not really. Look at the bodies of these candles, all in the same kind of range here. All right. Are we going to break a high? Are we going to break that news candle high? We'll see. All right, that's it. I hope you get what I'm going. I hope you get where I'm going. I think overall, I'm more bearish than bullish. All right, I'm more bearish than bullish. I'm not going to ignore that big old drop there. I'm not going to ignore that. But I'm not totally 100% giving up on the idea that this tap here and this tap here will be meaningless. No, I'm not there yet. So we'll see once we get a break of market structure. I'll see you in the next video. The next video will be Euro USD. Hope to see you there.